Good morning. You are listening to your essential daily briefing. The past 24 hours have been defined by a historic AI reckoning on Wall Street, a dramatic escalation in the transatlantic trade war, and a monumental shift in the global energy supply chain. I'm Cora, and these are the top stories. We begin with the deepening rift between Washington and Brussels. Following the implementation of the 10% U.S. baseline tariff on Sunday, the European Union has officially retaliated. Late last night, the European Commission announced the Brussels counterstrike, a list of 15% tariffs on iconic American exports, including bourbon, Harley-Davidson motorcycles, and high-end tech components, effective immediately. In a defiant address from the Élysée Palace, French President Emmanuel Macron stated that Europe would not be coerced into a real estate deal for Greenland. This exchange marks the most severe trade disruption between the two powers since the mid-20th century. Meanwhile, in Asia, diplomatic channels are buzzing following a surprise meeting in Singapore between top Chinese and Indian defense officials. The two nations have reportedly agreed to a buffer zone in disputed Himalayan territories, a move seen as a strategic effort to stabilize regional security while both nations navigate the volatile U.S. trade environment.
Turning to the markets, the sell-off of the century hit the currency markets yesterday. The US dollar plummeted to a three-year low against a basket of currencies after several G7 nations suggested they might diversify their sovereign reserves away from the greenback in response to the tariff wars. In the commodities sector, copper is the new digital gold. Prices surged past $14,000 per metric ton yesterday. This is driven by a massive supply squeeze from Chilean mines and a sudden spike in demand for the electrical grids required to power 2020's XS new wave of AI data centers. In South Korea, the Bank of Korea has held an emergency session. With the won fluctuating wildly and the export-heavy KOSPI facing pressure from the trade shield measures, the government has announced a temporary tax holiday for small to medium enterprises that pivot their exports toward the newly opened EU-India trade corridor.
The technology narrative reached a fever pitch last night with Meta's Q4 earnings. In what analysts are calling the AI reality check, Meta's stock swung wildly in after-hours trading. While the company reported record ad revenue, it also projected a staggering $50 billion in AI-related infrastructure spending for the coming year. The market's reaction was polarized. Long-term investors are cheering the all-in strategy, but short-term traders are fleeing, fearing a capex bubble. This comes as Microsoft and Google also reported that the energy costs for cooling their superclusters have now become a primary drag on their profit margins. In hardware news, NVIDIA has officially unveiled its QuantumLink chip, a new architecture designed specifically for the post-quantum encryption era. The U.S. government has already placed this chip under a Priority 1 export ban to prevent it from reaching non-aligned nations, further complicating the global tech supply chain.
Finally, in logistics, we are witnessing the great pivot of 2026. For the first time in history, more cargo is being booked on the Middle Corridor, rail and sea routes connecting China to Europe via Central Asia, than on the traditional Suez route. This shift is a direct result of the continued maritime instability in the Red Sea. In the United States, a major crisis is brewing at the port of Savannah. A sudden cyber outage has frozen automated gantry cranes, leaving dozens of container ships stranded. Authorities are investigating the outage as a potential state-sponsored retaliatory hack linked to the current trade tensions. Lastly, the International Air Transport Association, IATA, reports that air cargo rates have spiked by 22% this week. As companies scramble to bypass tariff-related maritime delays and port congestion, the sky-high costs of air freight are beginning to trickle down to consumer prices for electronics and medicine. That concludes our global briefing for February 3, 2026. We will continue to monitor the opening of the Asian markets and the ongoing trade negotiations. I'm Vivian. Stay informed and have a productive day.